Hi, it gives me great pleasure to have Chris Powell, the Secretary and Treasurer of GATA, the Gold Antitrust Action Committee, on with us today on the GoldCore market update. Chris, you're very welcome.
Oh, delighted to be with you here, Mark.
Yeah, well, thank you very much for giving us your time today. Yeah, I have huge respect for you and for Bill Murphy and what you've done over the years, and just the integrity you have and the courage you've shown in, I suppose, highlighting the manipulation that's been going on in the precious metals markets for donkey's years now. But yeah, since I suppose you got involved in mid-2000s, and you've uncovered the historic evidence as well, you know. So I'd like to begin just, I suppose, the beginning and how you came to gold itself as an investment and your journey towards precious metals, and then how you came to getting involved with GATA.
Well, it was just a coincidence or bad luck, as the case may be. Back in, I don't know, maybe 1998, Mark, I answered an ad, I think it was in the Wall Street Journal or some other financial publication, offering free trial subscriptions to a dozen financial newsletters if you just send them your name and address. One of the letters they sent me was Jim Blanchard's Gold newsletter, which is now run by Brian London. Blanchard was saying back in 1998 that gold was really low by historical standards, and I had heard somewhere buy low and sell high, so I began to follow the gold market just really out of contrarian interest. Soon after that, Bill Murphy, who's now GATA's chairman, started his own internet site of market commentary with emphasis on the monetary metals market. I subscribed to that, and Bill very quickly started writing about what he saw as manipulation in the gold and silver markets. He thought that the bullion banks would come in and smash the prices whenever they approached what seemed to traders like important technical levels. Bill thought this was collusion. I thought there was a lot of evidence for what he was saying, but I thought he was missing something. I was a newspaper editor in Connecticut for an independent family-owned paper, and I'd had a fair amount of experience with antitrust law because we'd had to sue or threaten to sue some very big newspaper companies that were trying to prevent us from getting certain syndicated features. So knowing something about antitrust law, I wrote to Bill saying that there was a lot of evidence for what he was writing, but if what he was observing, or thought he was observing, was right, it was against the Sherman Act and the Clayton Act and 50 state antitrust acts, and that somebody ought to start a committee to hire a law firm on a contingency basis and sue the bastards for triple damages under antitrust law. I added that if somebody wanted to start such a committee, I'd contribute $500 to it. Bill thought that was a good idea, and that's how GATA was started. We soon were able to get a substantial contribution that allowed us to engage an antitrust law firm, but excuse me, that's when things sort of fell apart a little bit, because the antitrust law firm looked into the situation and the law and came back and said that it seemed to them that under the Gold Reserve Act of 1934, as it was amended, that it was completely legal for the U.S. government to rig the markets, and particularly the gold market. And if the U.S. government was behind what the bullion banks were doing in the gold market, as we began to think was the case, then there really wasn't any legal action that could be taken to stop them. We weren't quite sure if that advice was right, and we did bring a lawsuit through our consultant Reg Howe in U.S. District Court in Boston back in 2001 against the Bank for International Settlements and the Fed and the Treasury and the bullion banks.
I remember that. Yeah, yeah. It was a very ballsy move, shall we say?
Complaining about the rigging. I attended the one hearing in that case in Boston, and an assistant U.S. attorney got up, moving for summary judgment, which is a kind of dismissal motion, and said that without admitting on behalf of the U.S. government that it was doing what our lawsuit complained of, that is rigging the gold market, the assistant U.S. attorney said the U.S. government claimed the power to do exactly what the lawsuit complained of. That is, the assistant U.S. attorney got up and said that under the Gold Reserve Act of 34, as amended in the 1970s, the U.S. government had the power to do the rigging that we complained of. Now, excuse me, the judge did not really decide the case on that basis. He found a technical jurisdictional point on which he said our lawsuit lacked standing, and he dismissed it on those grounds. But the lawsuit in 2001, I thought, brought out an awful lot of information about government and central bank involvement in the gold market. And to me, it was key for eliciting the admission from the assistant U.S. attorney that the U.S. government indeed claimed the power to rig the gold market secretly. From that point, we concluded that probably the best thing we could do would be simply to expose the interventions, to expose the rigging, to try to get the mining industry to care about it and protest it, to try to get the financial press interested in it. We figured that if it was exposed enough to investors, to responsible elected officials, that it would stop. We have not been right in that belief yet. I think we keep producing lots of evidence every year about rigged markets. We find that 99% of the gold mining industry and its executives could not care less about the rigging of the price of their product. They're interested only in touting the sales of their mining shares and collecting their bonuses at the end of every year. The financial press, I could not be more disappointed with and more contemptuous of. 99% of the mainstream financial news organizations will not touch the issue of governments rigging markets. I have met with a fair number of reporters and editors for those organizations. For years, I have sent them all our most important documentation, and with very few exceptions, they're too scared of the issue. I think they sense that their governments consider it a matter of national security, and they just don't want to get involved in it. With very few exceptions, a couple of years ago, we ended up on the front page of the Wall Street Journal, but the Wall Street Journal refused to. It published our accusations that the Fed was involved with gold leasing and swapping and was helping to rig the market, but it violated the first rule of journalism. That is, when you accuse somebody, you ask them for a response. And the Wall Street Journal published the accusation, but despite my repeated urging to the reporter, they never asked anybody at the Federal Reserve to respond to the accusation. I thought that was pretty telling. I have been able to get on CNBC every once in a while.
Bernie Lowe. Yeah.
Yes, thanks to Bernie Lowe in Hong Kong. I was not able to get on there when I was in Hong Kong a few weeks ago. Bernie is out on medical leave, and the people running the show there were really too scared to let me near the studio again. There was an Italian newspaper a few weeks ago that picked up on the gold rigging issue in a big way, did not mention us, but obviously had access to our material. But our premise has been that we can, this manipulation, this market rigging, this vast deception of investors, if we expose it well enough, we haven't succeeded in that yet.
No, no, unfortunately, but you've done a valiant attempt, and I think unfortunately the issue is just, the power of Wall Street, and just the mainstream media are completely co-opted, and they just refuse to go there. And you've managed to, it's fair play. You have managed to get into CNBC and Wall Street Journal. You've got little snippets into mainstream, but they never seem to want to follow through on the story. I mean, that's the nature of journalism as well, that you certainly might follow through and there'll be a follow-up story and you probe a little bit more or give the wider context, but the context is decisive in this entire thing, but they just refuse to go there, but that's why I have such respect for both yourself and Bill, because it's just been, it shows the passion of you two men and the tenacity and the courage, that you've just, you're like dogs with a bone, because it's such an important issue, not just, as you said, to precious metals investors, but just to people, to families, to businesses, and just an entire financial system, a monetary system is
well, it's a question of
whether
we're going to have, free markets or not, whether we're going to have limited and accountable government or not, whether, democracy is going to be able to function because it's going to be able to know what the government is doing. We don't really care about gold and silver as metals, as minerals, as atomic elements. We care about the bigger issues of free markets and limited and accountable government and fair dealing among nations. To us, this is really the biggest issue in the world. It involves the valuation of all capital, labor, goods, and services in the world, and these valuations are being set in a really imperialistic and totalitarian way, not in an open free market way, and we really think that's evil.
Yeah, no, absolutely, I agree. And so, just before we get into the what and all the evidence that's there, both in recent history and more recently in recent times. The narrative in the mainstream is gold's a volatile commodity. It's a barbaric relic. Why would central banks, why would officialdom, why would they manipulate gold and silver prices? So can you speak to us a little bit about that?
Oh, of course, because, gold was the world reserve currency. It is potentially, again, the world reserve currency. It is a competitive currency that is not necessarily under the control of any one government. It is a potentially neutral currency that might serve the world again fairly as a reserve currency. It competes with government-issued currencies for investor dollars and consumer dollars. It competes with all forms of financial assets for investment. Governments have always seen gold as a threat to their currencies. There's lots of material in the U.S. government archives, some of it fairly contemporary, about how the policy objective of the U.S. government long has been to push gold out of the world financial system in favor of the dollar, to protect the dollar's status of the world reserve currency. The U.S. government does not want gold interfering with the dollar's monopoly on world trade and commerce. That's a pretty well documented point in U.S. government archives. And if you follow what central bankers say when they don't think anybody is listening, when they're think they're talking just to each other, you'll see that too. But that's a very well established point in Western government policy.
Yeah. And officialdom themselves, I mean, there's quotations from Alan Greenspan and from Eddie George in the Bank of England, and a lot of actual quotations from these people, in effect, admitting to intervention in the gold market.
Jelle Zylstra, who was simultaneously president of the Netherlands Central Bank and the Bank for International Settlements, wrote in his memoirs that the gold price always had been suppressed at the behest of the United States. Paul Volcker's autobiography came out in a U.S. edition a few months ago, and he records that back when he was an assistant Treasury Secretary in 1973, he was advocating gold price suppression during the currency revaluation that took place that year.
I think he said it was a mistake not to have intervened even more, didn't he?
Not to have intervened in the gold market to keep the price down during the currency revaluation. the secret staff report of the International Monetary Fund in March 1999 states very plainly that central banks refuse, excuse me, they refuse to make a candid disclosure of their gold swaps and leases, and to distinguish their gold swaps and leases from their total gold reserves in the vault, because they want to protect their ability to intervene surreptitiously in the gold and currency markets. That is, the staff report of the IMF from March 1999 says that if the public knew how much central bank gold was out on loan and being swapped for the purpose of currency market interventions, their secret currency market interventions wouldn't work.
Nor would their QE of today. And now they're talking about doing even more QE. Yeah.
These documents are all over the place, particularly in GATA's documentation archive. Gold price suppression is probably the foremost purpose of Western central banking. Central banks have other purposes, but I think the main purpose of central banking is to protect the value of their currencies and to protect the value of government bonds. And they will undertake this protection surreptitiously through deception by disreputable means if they have to do it. And they've been doing it for a long time.
Yeah, absolutely. There's a quotation as well from Greenspan, which is central banks stand ready to lease gold in increasing quantities should the price rise. He testified to Congress in 1998. So, I mean, that quotation, he's saying that we will intervene if we have to intervene. So he's almost half suggesting that they haven't been doing that. But I mean, go back to the London Gold Pool. I think you have voluminous evidence at this stage, huge amount of both circumstantial evidence, and some of it is almost smoking gun style evidence. When you get these admissions from central bankers, and the Eddie George quote as well, which he talked about, we looked into the abyss, didn't he?
Well, that quote has never been officially confirmed. That was put into GATA's consultant's lawsuit in the Boston case. He had that from what he thought was a supremely reliable source, but it's never been attributed, and that's why I don't use it. I do think the attributed stuff we have is so overwhelming. Greenspan, in his testimony to Congress in '98, he was saying, excuse me, he was saying that the purpose of gold leasing was contrary to what central bankers around the world have been saying. Central bankers around the world said that, we're leasing our gold to earn a little income on an otherwise dead asset. Greenspan told Congress that was not the case, that Greenspan told Congress that central banks lease gold to keep the price down. And people just don't want to look at that.
No, unfortunately. So let's just look briefly, in terms of the history. Obviously, gold has been money throughout history, as you alluded to. Every great empire the world has ever seen has had gold as money and the currency of the people in terms of day-to-day commerce and the backbone of their economies and indeed of their empires. More recently, obviously, in the 20th century, Roosevelt went off the gold standard, classical gold standard, 1933. And then we had the pegged price at $35 per ounce, and then we had Bretton Woods, and then obviously that continued up until 1971. But talk to us about the period in the 1960s and what happened with the London Gold Pool, because I think it's very important indeed.
Well, in the 60s, the United States was spending a lot more money than maybe it should have. It was running the Vietnam War. It was also running big new social programs. Investors around the world and certain governments began to realize that gold was worth more than the peg price of $35 an ounce. There was a lot of offtake in gold, and the Western central banks decided they wanted to try to hold the gold price at $35 an ounce by dishoarding from their reserves. And so they set up what was known as the London Gold Pool, which was the United States and the United Kingdom. The Bank of England was the executor of the scheme. There were 6 other countries involved in it, and every day they would distort as much on a cooperative basis from their gold reserves as necessary to hold the gold price at $35 an ounce. But in 1967, early 68, the offtake from the gold pool became so large as investors realized that gold was grossly underpriced, that the offtake became very fast, and the U.S. government realized that if the offtake rate continued at that volume, the U.S. gold reserve would be exhausted in a few months. And so in March 68,
both by investors and central banks
central banks,
which is very akin to
realized the dollar was overvalued and gold was undervalued. So in March 68, with so much gold draining out of the gold pool, the United States was sending emergency Air Force cargo plane flights over to the Bank of England loaded with U.S. gold reserves to replace the British gold reserves that were being advanced into the gold pool on behalf of the United States. When they couldn't tamp the demand down in March 68, the U.S. government asked the Bank of England to close the gold pool. And then, at least for a few years, the gold price didn't suffer a lot of intervention.
And when was Charles de Gaulle's quote about the U.S. Having the dollar as a reserve currency of the world, and that being an exorbitant privilege?
Yeah, I think that was his finance minister, Jack Roof. I'm not sure if that's right, but certainly reflected de Gaulle's thinking that it was grossly unfair for one country to have the exclusive issuance of the world reserve currency, that you could just expropriate the world that way. And in fact, people don't realize it, but the primary mechanism of the Nazi expropriation of occupied Europe in World War II was not done by the Wehrmacht or the SS running into the Louvre and taking the paintings off the wall at the point of bayonets and stealing the gold reserves of the occupied countries when they hadn't been shipped out of the country in advance of the invaders. The primary mechanism of the Nazi expropriation of Europe during World War II was currency market rigging. The Nazis would get hold of the central bank and change the exchange rate. For example, in France, the franc prior to the war was worth more than the German Reichsmark. After the occupation, the Reichsmark was worth something like 20 times what the franc was worth. In Eastern Europe, the Nazis issued, where there wasn't really a sophisticated central banking system, the Nazis issued special occupation currency that people could use, but it was not exchangeable for anything in Germany. So people had to use currency in their lives, and using the currency system controlled by the Nazis, they became servants of the occupation, and all the production of occupied Europe began to flow out of occupied Europe and into Nazi Germany with nothing flowing back. There was starvation in Europe. There was great privation in Europe, because the Nazi occupation got hold of the banking system and began rigging the exchange rates. That's exactly what the United States and its allies are doing today.
Yeah, it's interesting. And so the Nazis are in effect creating their own exorbitant privilege and allowed them to live way beyond their means and to consume the resources of other nations, and also to fund their own imperial ambitions, because conquest and war and military expansion can be very expensive indeed.
Yeah, and unfortunately, we just cannot get responsible people to examine the system that's in operation today.
No. To talk to me a little bit about Ferdinand Lips. He has that wonderful book.
Yeah, he was a Swiss banker, was very involved in the gold business. About 20 years ago, he wrote a book called Gold Wars, which acknowledged the gold price suppression scheme and gave GATA some credit for trying to protest it. He died, I think, about 15 years ago. Unfortunately, he never got to to see the vindication of his work, but
he doesn't get the credit he deserves, I think. I mean, that book Gold Wars is just amazing. The history in it, you know, it was a real eye opener for me. I'm sure.
Yeah, all this stuff is history. It's public record. It was much of the gold price suppression scheme has been, you know, conducted in the open until recent years, and Freddie Lips documented it.
He did, yeah. And so today everyone's focused on Jim Rickards, and he's done a good job in terms of, you know, his best-selling publications in Currency Wars and the other books that he's done. But I think that's sort of an original book, or the original book, should I say, that sort of, you know, it captured the history of it and also the motivation of, you know, exactly why this was happening. You know,
an excerpt from one of Rickards' books, which summarizes the history and mechanisms of gold price suppression, is posted on GATA's internet site. I think it's really the best summary that's ever been written about the policy.
Yeah, very good. To tell us about the inception and, I suppose, the creation of the gold futures market and what you've uncovered in that regard.
After the failure of the gold pool and President Nixon's really crashing the Bretton Woods system by ending dollar convertibility into gold for foreign countries in '71, the Western countries were looking for a new system of gold price control, and I think they settled on setting up gold futures markets. There is a cable from the U.S. Embassy in London to the State Department in Washington from late 1973, which came out with the big stash of U.S. diplomatic cables that WikiLeaks got a few years ago, and this cable's on GATA's internet site. But an official in the U.S. Embassy in London sent this cable to the State Department saying that he had surveyed the bullion banks in London, and that they were very confident that once a gold futures market was started, they would be able to inject so much volatility into the gold market, and particularly the gold price, that they could scare ordinary gold investors away from ever investing in the metal. Now, that doesn't prove that the US government or the central banks instigated the futures market, but it does say that they had a really powerful interest in it, so much so that they sent a U.S. diplomat around to the bullion banks to see if there'd be suppressive results from a gold futures market, and they got assurances from the bullion banks in London that, oh yes, just start up this gold futures market, and we'll teach people to buy gold.
Yeah. And I mean, that is the narrative in the mainstream, that gold it's volatile, you know, and they completely ignore all obviously the history in terms of gold as money, but also even with the interventions and manipulation, gold has still outperformed stocks over the long term, whether it be 1971 or even 1999, 2000, you know. So,
but they've given it a terrible reputation.
Exactly.
You know, all the respectable people in the world are in the financial sector. Almost all of them are against it, and they create a lot of bad publicity for it with their interventions.
Well, absolutely, yeah, because when the price goes down 3 or 4% in a day, straight away people say, oh, how can that be a safe haven, you know? And obviously there's the volatility around Lehman Brothers. I still have people saying to me, oh, look, Lehman Brothers happened and the gold price fell, but it only fell for, 2 days or 2 weeks. I think over the month and over the quarter and over the year, to obviously 2008, 2009, gold was absolutely up. It was up every single year in nearly every single currency from 2007 through to 2011, 2012, during the height of the financial crisis. But yeah, it's still there that it's a commodity and it's volatile. And there are two things that a lot of the mainstream, they've just been conditioned by the mainstream media, and that's partly because of this volatility, which is artificial volatility, and we see it today.
And yet central banks themselves treat it as money. It's treated as cash on their own books. And as we know from the last 2 or 3 years or so, the central banks have gone from net sellers of gold to net buyers of gold, at least if you believe their announcements. Now, they're not buying dollars as much now as they're buying gold. So presumably they see some merit in gold as money.
Indeed, yeah, and yeah, I mean, and there's a statement by Mario Draghi only a few short years ago talking about gold as a reserve of safety, you know. So that right there's another, but that sort of thing doesn't get picked up, unfortunately, in the media, and therefore the man on the street doesn't know it, you know. Just in terms of the nexus, obviously we've seen more what looks like blatant manipulation again in recent days, recent weeks, and we suddenly see, you know, $3 billion worth of gold futures put into the marketplace in a matter of seconds, and the price comes down. It used to come down $20, $30, $40, $50, and there'd be follow-through selling, and it would completely the best marketplace. But now, you know, it only comes down $5, $10, you know, and I think that's very encouraging indeed, you know. And but so in terms of, obviously it can be manipulated in the futures market. All it takes is a large bank on Wall Street to have a young trader who they instruct to sell a huge amount of futures into the market in a concentrated bout of selling in a very short period of time, and that pushes the price down. But do you believe that that is coming about? Obviously, there's the exchange stabilization funds, then there's the working group on financial markets, the aka the plunge protection team. They're two sort of organizations that are there in order to, I suppose, protect financial markets from crashes and from dislocations in that regard. But where do you believe the nexus of this is in terms of under what auspices do you think the manipulation is happening today? Or is it potentially directly from the US Treasury into, you know, these proxy banks on Wall Street?
Yeah, I'm morally certain these are government interventions. I mean, what do you know? You know, whoever is doing these flash crashes, first, he has access to virtually infinite money, and second, he's doing it to smash the price down. He doesn't try to get a good price for the imaginary gold he's selling. He's dumping all these contracts at once. So whoever is doing this has got infinite money and has an interest in knocking the gold price down. Well, I think that leads you only in one place. It leads you to governments and central banks. They have infinite money, and they have the long documented history in wanting to suppress the gold price. But there's some other powerful evidence, really, I'd say it approaches proof right now, and that is that GATA and U.S. Representative Alex Mooney, a Republican of West Virginia.
Irish American?
Yes,
Irish Cuban American, maybe.
Possibly.
Yeah, we'll claim him as our own with that name anyway.
Well, listen, I think any patriot would want to claim him as a great American, but he has written letters to the Federal Reserve and the Treasury Department at GATA's request, asking the Fed and Treasury to specify the markets they are secretly trading in. And he has also written to the Commodity Futures Trading Commission a letter duplicating the questions GATA has put to the CFTC, asking the CFTC if trading by the US government or its agents, its brokers, that manipulates markets is subject to the CFTC's jurisdiction, or if it's perfectly legal under the Gold Reserve Act of 1934. Well, the CFTC refuses to answer that question. CFTC will not say whether it has jurisdiction over manipulative trading by the US government or its agents. Mooney's letter to the Fed and the Treasury asking them what markets are you secretly trading in was acknowledged by Federal Reserve Chairman Jerome Powell some months ago, but it really wasn't answered. Powell wrote back to Mooney saying, well, the Fed's not trading in gold, but that's not what Mooney asked him. Mooney asked the Fed, what markets are you secretly trading in? Powell said that, well, the Fed's not trading in gold. That wasn't really an answer, wasn't responsive. Powell added that the Treasury Department would make its own response on its own behalf, but that was a year ago, and the Treasury Department still has not answered Mooney's letter with the questions, what markets are you secretly trading in? Well, when the Treasury Department and the Federal Reserve Chairman refused to answer a member of Congress asking them, what markets are you trading in? You can be pretty damn sure that they're trading in markets on a fairly widespread basis, and they don't want the world to know about it because they're deceiving the markets with this trading. And if the secret trading becomes public, the markets will know what's going on. There's another piece of proof that this kind of secret trading is going on, and that is the CME Group, which operates the major futures markets in the United States. The CME Group runs what it calls its central bank incentive program, and documents about this are on the CME Group's internet site. The CME Group's internet site says that the CME Group is offering volume trading discounts to government and central banks for trading all major futures contracts in the United States, and not just financial futures contracts and not just gold and silver contracts, but even agricultural contracts and base metal contracts. And this program acknowledges that central banks have the ability to get discounts on their futures trading on all CME Group futures in the United States. Now, this does not confirm that such trading is actually happening, but CME Group just posted a notice saying that its central bank incentive program has been extended through the end of January 2020. Now, would they extend the program if it was not being used by central banks and governments to secretly trade all the futures markets in the United States? That's doubtful. I think between the Treasuries and the Fed's refusal to answer questions about their secret trading and the CME Group's central bank incentive program for secret trading, I think we can be very confident that the US government and other governments and central banks are secretly trading the futures markets of the world comprehensively for the purpose of commodity price suppression. And in fact, this was hypothesized by the British economist Peter Warburton in a brilliant essay he wrote back in 2001, in which he opined that central banks would need only a few $1 billion in secret trading to control all prices by manipulating the futures markets around the world. And I'm very confident that that's happening. And I just wish I could get the Wall Street Journal and the New York Times and Reuters and the Financial Times and New York Times and other major financial news organizations simply to put this question to the central banks: what markets are you secretly trading in, and what is the purpose, the objective of your secret trading? They won't do it.